You see red in your portfolio, you're feeling sick to your stomach, you're wondering, should I sell before it goes down anymore? If this sounds familiar, you are not alone. Many fall into this and it can cost you so much in the long run. Today, I'm going to be talking about how to build up a mindset that keeps you calm, committed, confident, and in control through the hardest volatility. So I was inspired by this video right here. I lost over $10,000. And we're going to come back to this. But first, I want to talk about a couple of times on the stock market when things were at their worst, but I made it through without any interruption to my investments. First, 2008, the Great Recession. So this was caused by a housing market crash after years of easy lending. Everyone was ready to borrow. The banks were lending out money, and then the loans went bad. So there was a trend going on of these subprime mortgages, risky loans given to people with shaky credit, which led to what they call the housing bubble bursting when the prices skyrocketed and then pulled back by 30 to 50%. We were in a financial crisis. Those banks that had loaded up on these toxic loans led to huge bank failures like Lehman Brothers back in September of 2008. And things continued to go downhill, high unemployment, 8.7 million jobs lost, and then the government having to step in and bail the banks out in order to stabilize the financial markets. So 2008 was a disaster. Now let's think back to 2022. We were dealing with inflation and rising interest rates. This was caused by the post-pandemic spending, which fueled sky-high prices. Those stimulus checks and low rates were too much for the economy, leading to inflation, prices of groceries and gas, and everything were going up drastically. So the Fed stepped in and hiked rates in order to avoid a complete crash. So high inflation peaked at 9.1% back in June of 2022. Everyday costs were up 20 to 30% from those pre-pandemic levels. Interest rates jumped from 0 to 5.5%, making money more expensive for everyone to borrow, including businesses. So these are both times that shook the stock market and there were huge pullbacks. So now looking at the performance of the S&P 500 for reference since 1980. In 2008, it had a negative return of 38.49%, and in 2022, a negative return of 19.95%. But also take a look at the years following. 2009, up 23.45%, and then 2023 and 24, back-to-back years, up 24 and 25%. Now, let's tie all that back to I lost $10,000 on the stock market. This woman started investing in the fall of 2021, just before everything was about to start to take a turn for the worse in 2022. And she was calling herself an investor at the time, but she did not zoom out, take all of the different factors that I just ran through into account. She didn't have a long-term vision. She wasn't looking at her investments as a marathon. She wasn't considering the big picture of putting the research in, knowing what you're investing into, and giving it time to recover. Patience pays when you hold through those turbulent times. Obviously, long-term growth is not going to happen in a few months. You have to give it time. In most cases. Now, I'm going to highlight one stock and a couple of ETFs that she was holding in her portfolio that contributed to this $10,000 loss that she didn't even have to incur. First, we have Altria, ticker symbol MO, and this is one that I've never invested into, but I just wanted to highlight what she did. She bought in early 2023 when the share price was about $45 and sold about 8 months later in early 2024 when the share price was $42, taking on a loss of about 7%. Today, September 12th, 2025, the share price is $66.65. So if she just would have held on, she would have been up 48%. along with receiving those dividends, which Altria has a dividend yield of a little over 6%. Next up, let's take a look at VTI, and this is one that I definitely do have in my portfolio. It is the Vanguard Total Stock Market ETF. She invested into this one in early 2022 and had an average price of $235 and sold in 2023 at about $219. So about a 7% loss. Today, the share price is $324.31. So by holding and being patient, she'd be up 38% right now. Last one we'll take a look at is VYM, the Vanguard High Dividend Yield ETF. They focus on high dividend U.S. stocks for steady income, reliable companies like utilities and consumer goods, but even those companies couldn't withstand what we were going through in 2022. She bought in February of 2022 at about $111 and sold in July of 2023 at about $107. So taking on a 4% loss there, and the current price is $141.38. If she held this one, she would have had a gain of about 27%. Plus, just like with Altria, those dividends would have been rolling in all along. And we've already been through it again in 2025. This is a look at the S&P 500 year to date. So we started off the year still riding that wave from 2023, 2024, hopes of rate cuts coming. And then Trump took office and started to make some changes. The most drastic coming in April, when we were hit with those fears of the tariffs, escalating trade tensions, the announcements that were going to be coming on Liberation Day. So the markets dipped significantly. Investors panicked, but before you know it, some tariffs were paused, negotiations were made, and now the market is hitting all-time highs, up about 30% since those April tariff fears. So we have to be ready for it. It's not always going to be a 2% shift when it comes to our portfolios. We have to zoom out, reflect on the historical performance of what we have in our portfolio. Not every individual stock always recovers, but in looking at the examples I shared from her portfolio, especially those two ETFs, all she needed to do was have patience. So when it comes to my investments, those giving exposure to the S&P 500 or total stock market, I have no fear in continuing to invest even through the hard times. And I know that even looking back much further than 1980, looking back 100 years, it always recovers. So I wanted to highlight her story because I don't want us to do the same. Investing does come with risk. But when it comes to this person that I was highlighting in this video, she did her research. She was actually investing into things that aligned with her goals, but she didn't have the presence of mind to zoom out and take all of the economic factors into consideration. If she had just held on, been patient, her portfolio would be thriving right now. And she is a dividend-focused investor, so all along, she still would have been receiving her dividends. Think about what your time horizon is when it comes to your investing. Don't be shaken out of good quality investments because of short-term volatility. I know some of these stretches of time are painful to go through, but giving up on an investment after 8 months under the circumstances that we were facing is a choice that she now regrets. Let's learn from what she shared, what I summed up here for you today, and realize the power and opportunity that investing gives us in order to build wealth. Let me know your thoughts in the comments. Share any questions or video requests. Riding this roller coaster of the stock market gets scary sometimes, but I'm definitely going to keep moving forward. Thanks for watching. Okay, bye.